everyone, K Kim here. Today's February 23rd, 2018, Friday. Hope you guys had a good week trading this week. Welcome to the market update. Again, my name is K Kim with the Traders Club. Today we're going to be looking at, let's keep things simple today. Spider, IWM, and Qs, and we'll call it a day. We're going to follow up from what we've been talking about in the last week's video, last couple weeks of video. Last week we talked about this level here, 269.56, 264. This was the last Friday, this shooting star candle. We talked about that potential pullback coming. And 2 weeks ago, we also talked about this Dragonfly Doji, that long, big Dragonfly Doji that needed to confirm. And 2 days pattern, which is that big, bearish, red Marubozu candle. And the next day, we had that long, high wave, long-legged Dragonfly Doji there. So 2-day pattern was a bullish Rami pattern. We talked about a few weeks ago, and we needed to see these two patterns continue or confirming by closing, by getting above this level, which is a prior week's high. So we did that here on this day, which is the 15th of February. And then the Friday came last Friday. This was the last Friday here on the 16th, through a little bit of shooting star. And then Tuesday, Wednesday, Thursday, you see a little bit of pullback. In that process, we have formed what we call bull flagging pattern. And we talked about this flagging pattern on the last week's video. We talked about that, and we wanted to see this thing holding above 269.56 for this minor term pattern to continue. Today, we saw a gap up, and we're seeing a follow through to the upside. And this is a good sign. Looks like we have a bull flag confirming here. And also you can see that we're staying above 10, 50, and 20. 20 EMA has been acting as strong support here last, just pretty much all throughout this week. That 10 EMA right there acting as support, and the 20 EMA just hovering just below it. And 100 SMA is still rising for the record. 200 SMA is still rising for the record. Saying that we're indicating that we're still in a primary term uptrend. So you can see all this moving average starting to kind of rise back up here, and 269, which is coinciding with that 50% retracement of my Fibonacci here. So that was an important level we talked about the last week. 264 was a level we talked about. Should any shenanigan volatility kick in, that's a level that we needed to hold for this minor term to continue. Well, we didn't need to kind of watch the level because we actually found support at 269. Keep that in mind though. I think everything everything has been really orderly fashion last couple weeks. I mean, we did see kind of a really volatile price action here in early February, but after this bullish Rami pattern formed with the Dragonfly Doji candle, ever since then, it feels like the market has been really in an orderly fashion. Like it's just gone up, and then we held at 100 SMA, kind of sideways for a little bit. We saw that thrive, got back to 269. We gapped up, clearing above prior resistance here. In that process, we have cultivated what? Higher high. What is the definition of an uptrend? Higher highs and higher lows. So we got the low, we got the higher low, we have cultivated another higher high today, looking at this line chart, right? So in the minor term, we are cultivating an uptrend here, and that's a good sign. If you actually want to look at this as a kind of more of a pattern perspective, this looks like an inverted head and shoulder pattern here, which is a reversal pattern. And this, you could look at this as a neckline, right? You got the neckline here. We're just in that vicinity. In about 285 or so, there's a gap here. So possibly if the market continues to higher next week, it might get up, fill this gap, pull back, retest neckline as new support, and continuing higher. Or possibly this thing kind of fizzles, gets up a little bit, pull back initially, and then get up to fill that gap. And I'm not sure exactly how that plays out. So we need to continue to see this higher lows and higher highs developing for this minor term trend to continue. Another note is that as far as the price action is concerned, as of today, with the tangible data that is at hand that I can see, everything does look bullish. And in the minor term, we have a cultivated minor term uptrend with the higher highs and higher lows. We also talked about the inverted head and shoulder formation, neckline being somewhere up here. But I think like psychologically speaking, I think a lot of people are still kind of like scared after this 12% abrupt sell-off. So I think there could still be some shenanigan volatility potentially coming in next week. Should the volatility kick in next week, should the shenanigan gap down, something like that occurs, and we do see maybe like a gap down and a flush, which is a possibility. If we do see something like that, it's hard to tell as of today if that's going to happen or not. But if we do see something like that, if this thing gets below 269.72, we want to see the 100 SMA hold, which is coinciding with the last level of fib at 264-ish level. As long as we can hold this 100 SMA 264.5-ish level, I think there's a chance we can continue to move higher. Right, so that's something we need to follow up next Friday. We'll see how that plays out here. Let's go to IWM. Very, very similar pattern there. As you can see, we did find support at that 50% retracement, which is coinciding with the 100 SMA. Actually, it's interesting to note that Spider were nowhere near 100 SMA, but IWM has been getting some support from 100 SMA for pretty much all this week. As you can see that 100 SMA has been acting as support in that vicinity, coinciding with that 50% retracement. Also, the 151.78 level is an important level here. Same concept here. If any kind of shenanigan gap down happens next week, we want to see 150 and 149 to hold. If we can hold that, there's still a chance we can kind of cultivate more of a sizable higher low before getting back up. There is a gap here. So if I actually go to line chart, there's a gap at what? 156.78 on IWM. So there, you can look at this. This one, we can't, this one doesn't quite look like Head and Shoulders, because it's, here is kind of a bit of a gap there, not gap, but like the distance. So, I mean, this one does look like a sizable higher highs here. We did cultivate another high, got the low, higher low, but doesn't quite look like inverted Head and Shoulder, not like Spider, but definitely we do have a higher lows, higher highs here. So as long as it can hold 151 in the micro term, 153 early next week, early in the morning, I think there's a good chance we get up here, fill this gap. Once the gap gets filled, there's probably going to be, it's going to act as probably kind of a short-term resistance pullback before going higher. But again, as of today, IWM also looks bullish, holding above all these moving averages. We're now staying above 50, 10, 100, and 20. So again, looks like a kind of a bull pennant type of pattern here, which is a bullish continuation pattern, trying to break out here. But then again, fear still lingers around in the market. So I think, I'm still open-minded for some kind of shenanigan volatility or some sort. But if we don't see that, and if the market continues to play in an orderly fashion, that'll be great. And then I think we can continue to grind higher, and then we'll come and fill this gap, and we'll follow up on next week. I'll let you guys go with this Nasdaq Composite. Nasdaq Composite looks most bullish here in the minor term. As you can see, 10 and 20 is now spreading. So we don't see that in the Spider and IWM. Spider and IWM, they're kind of clustered together, these moving averages, and they're starting to kind of get up. I mean, IWM has been supported by 100 SMA this week, but you can see Qs is nowhere near 100. So much more bullish connotation. It's interesting to note that just in short few weeks, we're near the all-time high here already. So see how fast the market can recover. This is what happens in a bullish market, in a primary term uptrend market. You're going to see these up and downs, but if you understand these levels, a lot of times the market will, bulls will fight back and bring it back up. So, but right now though, I mean, we are holding these. I think these are three important level. Let me get rid of this for now, but I think 263 and 260 is important level. Let's actually go to line chart here. Line chart also suggests that we got the high here, we got the higher high, definitely definitive. You got the high, higher high, higher high. We got three highs here. We got the low, and I got the higher low. So if we can kind of get up here, is there a gap somewhere? maybe a little tiny gap, I'm not sure, but if we can get up here, maybe get up to a new all-time high, pull back, kind of cultivate another higher high before getting back up. But I know what's going to happen if this thing gets up to this level here. I'm sure there's a lot of people calling for double top, and you know, that's not completely irrelevant for the fact that this thing actually did come down, came kind of pretty much straight down. It's pretty much V-shaped higher. Actually, a lot of these double tops do form in this kind of a more symmetrical type of pattern. Like if this would have done something like this, came down, and we kind of hang around here, maybe consolidate and then get up, I think there's less likely that double top is going to play out. But because the fact that we went up straight up, came down straight down, and we're going pretty much right back up, I do think that in this vicinity there's going to be a lot of volatility. I think it might even get up, kind of, you know, poke his head up and then come down. So I think that double top, it won't be completely relevant. We do need to see some substance from that. So let's see how it plays out here. You know, ideally, if this thing does go up, if you want to, avoid double top, we want to see price action maybe coming down, pulling back, maybe sizable pullback, you know, maybe somewhere here, and then cultivate more of a sizable higher low, and then break above the all-time high. Then we can have to look at this as a kind of like intermediate term uptrend. But if we start to fizzle and we start to see this thing kind of heavy sell-off, then we can definitely look at this as a double top, you know, like a intermediate term double top could be a warning signal. But let's not get too ahead of ourselves, and we'll follow up on that development maybe next week, next couple weeks, and we'll look at this and how it plays out. So that's it for me this weekend. Have a wonderful weekend. Good luck trading next week.